Why are stocks going up on bad inflation data? CPI came in high at 3.7 today. Could lead to more rate hike and a recession. Why aren't stocks going down? And why are bonds yields largely unchanged and almost heading down? Is today opposite day? Pick apart the CPI report and you'll see energy oil as the largest contributor to inflation this month, probably due to OPEC tightening oil supply to keep prices high. Not really indicative of the inflation the Fed is worried about or anything they can control. Priced in already. A phenomenon called event volume. Go over to WSB and see the number of people posting about puts. Their two are not directly related. Look at VIX, fear is at an all-time low again. So why wouldn't it be going up? People got jobs. A lot of those jobs have 401k. That money has to go somewhere. Profits go up with inflation. Inflation went up 0.3 YoY with the expected being 0.2. Almost on target, so why would anyone freak out? Markets are irrational and only understand one thing: greed. Stop using logic to understand markets. First time? It's the stock market, nothing makes senses anymore. My stocks are going down. But fear not, I'm not stressing today, lol woo ha ouch. Because money is worth less. So there's less benefit to holding cash or bonds. So people move their money to assets which can historically beat inflation. The numbers came out nearly exactly as forecast, 3.7 versus 3.6, the other was 4.3 matched. Which has been expected for a long time. SP was nearly neutral, not overbought or oversold at this time, so nothing to trigger a move. The value of assets is not a function of known data. They are a function of how much money is available to pour into them. Look to credit availability and employment rates and things like that. Priced in. Lots of hours in the day still. Whatever you think they'll do, they're going to do the opposite. Whatever makes sense opposite. Even when you're thinking fuck it, I'll think the opposite of what I'd normally think opposite. As soon as there's a mere whiff of a rate cut from JPOW, markets will front run and tank. Happens every time. Stock market is not the economy, vice versa. Over long periods of time, it should follow one another. But I wouldn't count on it on a daily, weekly, monthly basis. You get to annual and then perhaps too much money out there that can move the market in any one way. You just need enough big whales to agree, and then that's the way the market will go. 1. Markets are always trading on what they expect. The inflation report was within expected bounds. It's not good, but it's not really any worse than expected either. The Fed already said it's probably going to raise rates a couple more times. And nothing here suggests that they'll have to change tack. 2. Markets hate uncertainty. A report in hand removes uncertainty. 3. Random noise. SP 500 was down 0.5% yesterday. And right now it's up 0.25%. It's just retracing some of the loss from yesterday. Seeing a lot of healthcare and recession stocks coming back. This means, are we going to see another rate hike on September 19th? Because the dip happens 2 days after. The Zimbabwe stock market went parabolic. And their currency went through hyperinflation. Sometimes, people believe the stock market protects you from high periods of inflation. Inflation means companies can use it as an excuse to overcharge and make record profits, right? Give it a minute. The day of can be volatile due to large bets on outcomes. Repositioning will happen. PPI tomorrow and UAW strike at midnight tomorrow. Not to mention monthly options expiration Friday. A better indicator is, are we higher or lower on Monday? Because I bought a put. 0.01 above expectations is nothing. That means charging consumers more and making more money, then blaming inflation for the reason. You must be new here. At tops, markets are irrational. We're still basically at the top. However, inequality is widening worldwide. The mass rich is growing, while the middle class gets hollowed out. The small-time rich need a place to put all the cash they have but don't need stocks. Real estate are where they're storing that cash. This trend is likely to continue and will increase PE multiples. Emo. Why do you think they should go down? I thought it was pretty good inflation data. Core commodity still has deflation. Mom. Core services stayed in line while we start to see the trend of decreasing inflation of shelter prices. We had the lowest mom inflation for shelter in a long time. Lol, how big was your short position? I dunno, but in my opinion this kind of thing feels an awful lot like 2006 feet-ish. Just saying. Dude. In years of investing I have learned one thing: don't believe in articles and predictions and explanations and analysts and media and economic theories and social media and gurus and economists. It's all somehow random. By the way, I have read studies which concluded that historically the best inflation rate for stocks is approximately 4. There are studies which conclude that the best time for stocks is right after peak inflation. See? It's all only guessing. The whole economic system is elastic and constantly evolving and constantly changing. The market is doing what the market is doing. Trying to understand short-term moves in the stock market based on news or events will never make sense. Are you trying to find logic in the market? Shouting through cupped hands. Because the system has been decoupled from reality for decades, so the one can keep draining resources from the rest of US. Any explanation to the contrary is toxic denialism used to cope with the crushing realization that your life and the lives of the coming generations have been stolen from you with no hint of justice on the horizon. Because Street 0 NKS go up or down. Inflation went up 0.3 YoY with the expected being 0.2. Almost on target, so why would anyone freak out? It's called the stonk market and it only goes, it doesn't because it wants to. It's the fucking stock market. First time? Core inflation is what matters. Core inflation numbers were positive. Oil is the leading cause of inflation increasing. Rate hikes are not going to have any effect on gas prices. Core CPI and services CPI are what the Fed care about. Those are relatively fine this month. That said, if diesel stays elevated, core and services inflation will resurge on a lag from that, similar to last year. Headline goes up, then core, then services. Shelter is generally last to come back down. Everyone was expecting it already. It was already priced in. The stock market is forward-looking. If it came in significantly above or below the expectation, you might have seen a bigger move. Because stock prices are mostly based on feelings. First time. Watch and learn. Bad news is good news. My young Padawan. It's cute you think outcomes are as binary, especially in a calm, low VIX environment. It's going up because of higher oil prices. The core inflation didn't get worse. So CPI was close to what was expected. Because the market maker hedge funds are writing it up and drag netting all the bullish retail idiots whom they will flush when the selected cash volume meets their target. Same reason Nvidia fell on amazing news. Day's not over yet.